Happy VA Wednesday. I thought it'd be a good idea just to do a refresher on debt to income and how it plays into VA loans. So if you're new to the channel, I am a lender licensed in 48 states. If you're like, gosh, I just want to learn about VA step to finish, I have a free course. I know it sounds cheesy, but it's true. Like, I designed it for all of you so you know how to use your benefits. So that will be in the links as well. Okay. VA and debt to income, it's murky. It's totally murky. I saw a comment on my channel recently where someone said, hey, can you do a VA loan with a 47% debt to income? And the answer is maybe, okay? Can you do a VA loan with a debt to income of 35? Potentially. Can you do a VA loan with a debt to income of 65? Yeah, maybe. Okay, so let's talk about that. First of all, what is debt to income? So there's two calculations on your debt to income. I do have other videos that help you calculate it. And if you guys want the sheet on how to calculate it, drop me an email and Alyssa or Sandy will send that over. Okay, front end debt to income is your housing payment, so your projected housing payment, not what you're paying right now in rent, but your projected housing payment versus your gross income. So your before they take all the taxes, Social Security, pint of blood, all of that. Your back end ratio is everything on your credit report, not the balances, but the monthly payments, as well as if you have child support or alimony or tax, like a tax repayment plan, and the housing payment versus that gross income, okay? Now, how high you can go on the back end is gonna also depend on a back end calculation that VA has that no other loan has called residual income. And I'm gonna have a link to the VA page because they have a calculator where you can figure it out. But basically what residual income is it's trying to figure out based on how many people live in your house and your income and how much debt you have and the housing payment, if you'll have enough to eat. Like, that's really what it breaks down to. You know, it's taking into consideration the taxes that you pay. It's taking into consideration average maintenance. Now, a lot of times people hear this and they're like, oh my gosh, I'll never pass. It's pretty rare that people don't pass residual. And I'm gonna tell you the key reasons that I see it where, you know, someone can have a really low debt to income, like a 30 or 35%, but they're not passing that residual income. So the key reason that happens is if their source of income is VA disability. The reason's this. So we can gross up VA disability if I'm looking at the debt to income. So what that means is we basically add 25% to it because it's non-taxable. But on the residual calculation, we cannot. So if we're using VA disability, let's say it's a family of 6, that's where we start to see that we have to have a lower debt to income than what we would normally expect, right? Because like honestly, normally I'm expecting anything under 50, I'm gonna get an approval. It's just really when you get into the weeds of the residual income and larger families or a larger square foot home, and some level of income, whether it's disability, Social Security, you know, something where we're grossing it up on the front and can't do it on the back, that's where I usually see the issues, okay? Now, someone goes, oh, okay, well, wow, I heard someone got a 70% debt to income approved. Yeah, I've seen it. It scares me. It scares me so much. It scares me so much. But we'll see that. And the reason will be this, like, look, if someone makes a lot of money, you know, the residual income, no matter how much debt they have, the residual income usually will work out. Now, would I ever suggest that you do a 70% debt to income? No, oh gosh, no. And the reason's this, it's setting you up for failure. You know, unless there's a huge pot of income I can't use, like let's say you're married, but your spouse doesn't want to be on the loan and they make a truckload of money. Okay. But beyond that, like, no, it's very dangerous. Like, whenever we're really going above 50, it's where I'm starting to have the conversations of like, hey, please do a budget. Please do a budget. And I think what's problematic for people getting a VA loan is that lenders aren't talking to you about your debt to income, you know, and we'll see that with us is someone will be like, well, Jen, you only said I should do XYZ, but they said I can do $200,000 more. And I'm like, yeah, you can. Your debt to income is going to be 70%. Do you want that? They're like, what? And then I do the payment and they go, no, right? The lender who's giving them this crazy high approval never talked about debt to income, never talked to the implications about it, never talked about what house poor was, and most importantly, never went over a payment. Yes, that's the thing. If you guys are working with lenders who are not me, you need them to be going over the payment before you go shopping. Please, as someone who is house poor early in their life, don't do it. Don't. It sucks. It sucks. And look, I love top ramen, little sriracha. It's delicious, but it is not fun when you're eating it 6 months in a row. Don't do it. So look, here's the bottom line. VA, there's so much you can do with it. There's no real set thing on debt to income if you look at the guidelines, as long as it passes residual. Now, do lenders have additional overlays? Yes, many lenders do. Some lenders will say you can't go over 45. Some will say you can't go over 50. Some will say this, that, and the other. Guaranteed rate used to have overlays, but recently our CEO decided no overlays. I was so scared, guys. I actually like it now. At first I was like really upset because I was really worried, but I know that anyone who watches this channel, you guys are educated. You don't want to get yourself into trouble. But yeah, no overlays. So we're going to look at what the computer says. We're going to look at the residual income. We're going to look at what makes sense. We're going to try to get you into the house you want. But of course, along the way, we're going to be talking about debt to income. You know, it's a good idea to budgeting, but most importantly, making sure you're comfortable and ready for that payment. So as always, thank you for watching. If you have mortgage questions, get on the calendar. Literally, I pay Sandy and Alyssa. They're both licensed loan officers to all day long just answer your questions and help you plan, even if it's 4 years away. Take me up on it, okay? Seriously, take me up on it. Thanks for watching.